Yo, what up? So just let me know how y'all fuck with these videos, or whatever. That's my first time actually posting these videos on YouTube, but I actually have a lot of them. So if y'all fuck with it, I can actually go into more details about supporting resistance, supply and demand. Okay, what's up? So let me get started because I actually decided I'm gonna post this video on YouTube. And actually break down of actually how I trading in general, forex, whatever. Okay, and let me start real quick. First off, if you want to see the charts, you go right here to TradingView, and this is where they have the charts of all the markets: the forex market, the stock market, and so on. Crypto, you can actually see Bitcoin, the Bitcoin market, and all that. And so I trade forex. I trade GU, GJ, I trade gold. It's a commodity, but my main focus is GU, GJ, gold, and US 30 also. Sometimes looking to get into that. And basically, this was the trades I trade off. When you're trading, what trading is, what forex is, it's the foreign exchange market. How you trade different country currencies. And so basically you're buying and selling the dollar for the pounds or whatever, or the pounds for the dollar in that case. And I'm buying and selling pounds for a dollar right now. And I'm looking to take these trades or to buy and sell pounds at these levels of support and resistance that I marked up. And when I'm actually marking up these support and resistance on my chart, it's so easy to mark them up because all I'm really doing is basically looking to the side right here. Let me go down to a higher time frame. Looking to the side, and you look for these even rounded up numbers. I put my support and resistance, or you put your support and resistance of even rounded up numbers, because the banks like to buy. We would like to buy. Move the markets at these levels. We like to buy and sell at these more even rounded up numbers, rather than buying and selling at 1.2764. In that kind of case, they'll rather buy and sell at 1.26 500, 1.26 700, 2.3 500. In that type of case, every 50 pips or whatever, even rounded up numbers. And I came right here and I marked up this 1.2600 level. The next level I'd be looking to mark up would be 1.2500 right here. For instance, just giving you like a better example. You see it's already marked up, and you see how when price gets right to these levels, the price has a reaction. And so I'm trading that reaction. I'm actually looking to take trades, and I only take trades and place my biases off of, not just off of support and resistance, but also off of technical analysis and how the markets is the current market moving condition. And so basically, but trading only off of support and resistance, I wouldn't trade off of, off random levels, because you wouldn't expect to push as you would see as a push when you're actually at a supply and demand zone. Support and resistance, supply and demand, same concept, same stuff. And basically also, it's not only these levels. You have these are major supply and demand zones, support and resistance. And then we have the minor supply and demand zones where price might tend to also reverse off of. And you can look at these on your smaller time frames. Like, let me actually use a text box. Like this zone right here, it's a minor key level of support and resistance, where if you look to the left of the charts, price is actually reversed, made the action, made the higher low, reversed off this level and kept trending lower. As you can see right here, that's an example right here, made the higher low and held it as support, in the sense of that case, and made the reaction of that level. But we have the smaller support and resistance where price might make a move off of. But most of the times you tend to only and supposed to only take your trades off of these high support and resistance on. And let me actually break down what support and resistance is. So the markets actually price, the markets moves in two conditions. Well, two conditions. The markets will either only move highs or low in the uptrending condition, and will only make a low high and a low low in the downtrending condition. In the same case scenario. And so why this support and resistance is important is because whenever price gets to the support and resistance, think of it like as a door. If price breaks here, can it make a trend? Basically, can it make a trend and hold this level as support? And if it does, it's most likely gonna go and hit the next resistance. Price is holding support above the level, is holding that level as support, is respecting that price, range. Okay, price is not gonna go below that level. And the markets will move like this, come and test support, and if it holds it as support, support is below, resistance is on top, price will reject off support and go and hit the resistance. In that case, you'll be looking to buy because price is going from low to high. So you'll be looking to trade with the trend and actually looking to go for the position for that buys. In that case, they make high lows all the way to the next level of resistance. Then when price comes to resistance, you're gonna you have to take out your profits because price might hit resistance, does it's about to break out, then actually break out the fake out, then trend downwards. So that's the market. That's how the market looks, how the markets move. It might fake you out and see reaches right here. So that's why you're supposed to actually have a goal of where you're actually plan to take your profits at, and just not let your profits right on, because the markets can reverse and would reverse if it has to. And you never go broke taking profits when it comes to trading. But yeah, so you trade off support and resistance. When price violates support, is going to resistance, and when price gets to resistance, either it breaks above, retests and keeps going with the uptrend, or it breaks below, makes a lower high and trends down. And in this case, you're looking to sell your position and you're looking to buy your position, making profits both ways still. But yeah, that's basically the intro to trading, support and resistance, and market structure. But then let me actually come down to the charts. And number two thing, let me actually make this easier for myself. Number one, support and resistance. Okay. And number two is actually the trend. And the trend I just showed you, that looking for higher lows, looking for a trend at a support and resistance. Can you find a trend? Can you identify a trend at the support and resistance? And simply yes. This is the markets in the trending condition: high, low, higher, high, higher, low. It's making new highs and new lows, rejecting of this previous low and making a new lower high, and then making a new higher low. Then to go, probably continue going bullish. But yeah, that's the trending condition of the markets. And when it comes to actually trading the markets, you just don't look at support and resistance, and you know, look to trade, you also need to check out other confluences. You know, you need to have at least, I try to have as many confluences when I'm actually looking to get into the trade, as many confluences that I need to actually go into the trade. And you look at candlestick patterns, you know, how these candlesticks are being made. And my black ones, you know, normally it's red and black, but red and blue, but red and green, something like that. The black ones are the sells, and the blue ones are the buys for my chart. And so basically, the moral of the story is, when it comes to trading, you know, I was just giving y'all a quick on what market structure is and how to actually look to actually trade. In that case, how to actually look to identify your trade. Also, the trading session. When you're trading, what makes it easier is the trading session. Trade during the time the pair moves. GDP USD is a London session pair, so I will only be looking to take trades around 2 a.m. or better if my setup is there. If my setup isn't there, I'm just not gonna take the trade just because it's London session. Trade the setup during the session. And why this is important, because you might see a setup during the day, but is it during London session? No, so you can't take the trade. The trade might go into your the trade might go in your position, but over the long run, you actually have to learn to, you know, let those trades do. Like for instance, yesterday around 8 a.m. I was looking to actually take a trade 26, and well I was gonna take this short position kinda, and it would have been a 1-to-1, but I didn't take the trade because it was during 8 a.m. That was not London session. It was during 9 o'clock, so I didn't take the trade setup, but it would have been because it was in London session. And the reason you actually trade during those sessions is because there's more volatility in the market. That's when the London markets move. You know, like if I was trading stocks or like one of these New York session pairs like EU, Euro, USD, I'd be looking for trades around 8 o'clock because that's when the markets opens for them. But you know, GDP USD is a London session pair, so I traded it during that time. Yes, I'm up all night trying to catch these trades. But basically, that's basically the intro to trading. And when I actually look into trading, look into taking my position on the trades, and you know, I start down from the weekly, and I kind of scale down to the daily. Well, it's actually the 1 hour, 15 minute, 5 minute time frames to actually take my position, because the reason is I'm looking at capitalizing on these higher time frame moves. On the smaller time frames, I'm looking to catch these moves going up from a smaller time frame perspective, because the moves may not look so big on these higher time frames, but the moves is big. They are big on these 5 minute time frames, 1 hour time frame, if you're looking at it from a weekly point of view. And so, you know, normally I start off with my weekly. The markets came right here, and the buyers were able to actually push the market all the way here. This previous week, a bullish engulfing candle was formed, which is a candlestick formation of when this the buy candle actually engulfs over the sell candle of the previous day, previous hour. The candlestick formation can happen during any time frame. Depends, you know. But depending on what time frame it is, depends actually how strong that candlestick, that movement is going to be. So I saw a bullish engulfing on the daily, on the weekly time frame. Then when you come down to the daily, how I do is, you know, I try to identify the trend on the daily, where the market is trading at, if it's trading at a support and resistance on the daily time frame. And you know, a perfect example right here And I took a trade this morning, but I'm gonna get into that. The trade I took and why I took that position. But yeah, so you come to the daily, and you can see the daily's been pretty bearish during April, but then you can see the change of price. It was making high low, all the way from that level, low highs, lower low, looking for a lower high right here to then go short on the trade, or lower high right here or right here. Trading is all about probability. So there's a probability for price reversing off of here, and there's a stronger probability of price reversing off of here still going short. And what actually makes you puts your probability into your favor is actually scaling down, looking for confirmations, looking for entries, looking for signals in the smaller time frames. At these levels, what price does when it gets to these levels, that's what would make you take a trade. But looking for a lower high, then a low low to then go short. But instead, the markets did a high, low, higher high, held this level of support, came back, and resistance, came back, held it as support. As you can see, it held it as support because you can see these wicks. These are called wicks. These wicks, it tells you at some point of time during that day, each of these candles represent one day. These wicks tell you at one point of time during that day, the market's price actually came down into this level, but then rejected off of it. But mainly I look at the body, because the body tells you, okay, this is how where price opened at, and this is where price closed at. So I mainly focus on the bodies. But the price came here, held this level of resistance. Remember, resistance is at the top. When price breaks resistance, it's gonna hold it as support and then keep moving on to catch the next resistance. And so it came right here, held this resistance as support, and it shot up. Let me show you an example of what this actually looks like. Give me a second. Let me actually mark this up. If my charts is choppy, trust me, it's not, because my charts is pretty fucking clear. Okay, possible shorts here. Possible shorts. I didn't say there was gonna be short. Possible shorts. During that day, price came to this level and rejected off of it. But basically making a higher low. The next stuff I'm expecting is a higher high, which price made a higher high. And I would basically scale down to this time frame. I've identified the trend on this time frame is looking pretty bullish. Then I would see how, for this trade I took this morning, what I was looking for was, price rejected off this level, 12600 level, multiple times as resistance, as you can clearly see, as resistance, rejected that level as resistance. Then this previous day closed above this level, kind of telling you price was trading above that level. What I was looking for was a higher low, and kind of to take my trades, well, not above this level, but kind of this, if depending on how I scale down in, this would have been my take profit 1, TP2, and so on. But I was looking pretty bullish on the markets last night, because I just showed you it was making high low, and higher highs, higher lows, and higher highs. And if I draw my trend line, it kind of also correlates with the trend line. The trend is your friend. You're only looking to get in on trades in trending market condition, you wouldn't get in on a trade in this kind of condition, because all you're doing is killing yourself. You're risking it. That's called a consolidation. When the market isn't moving in any direction, that's called a consolidation. And consolidations will mostly happen, probably not during your session or during the news event. And you don't trade news. I wouldn't trade news during the session. I'm supposed to trade only if the market structure is in perfect condition, and the market structure can actually give me an insight of how the news is gonna look. And I'm gonna be taking my trades out the news. So basically on the daily, what I seen was this daily closed above this level. So I was looking to hold this level as support, then go along to hit the next major resistance level, which in that case, if I had to mark it up, look for my resistance level, I would come and mark up this 12700 level, and you can see this shit is not made up. Perfect rejection of that level. That would be my next TP level, take profit level, and I was looking for a price to hold support here. And so when we come down to the 1 hour, it's a 4 hour time frame, it's doing perfectly. Higher lows, making high and the higher lows, then go long. And the reason I got in for this trade and lost this trade with like 1.5% profit minus 1.5% drawdown, which isn't really drawdown because my account is still up in profit. But the reason I took this trade setup was because basically, it comes to the 4 hour, it's still giving me that vibes, price made this higher low, rejecting out this level. And basically, I just came during London session. I came right here, and when I'm actually looking to go longs, I don't get in right off the level. I have to wait for price to break a high above that level to then go long. I wouldn't get in off this level when I see a weak tap right here, because it might tap, make a lower high, then go short. I'll rather price break this highs and then go long, because then the probability in my favor is really high. It's simply because, first off, price is rejecting off a level above this banking zone, this support and resistance is rejecting off of this higher time frame, this 1 hour supply and demand zone above this level. So the probability for price coming back down here is low. If it does, the trade was wrong, which it really doesn't matter if you're using proper risk management. And so basically, price during London session during 2 a.m., which that's when I trade London session. Price was doing this highs, low, making a lower high. Actually, let me make this. I don't have so much support and resistance. Well, not support and resistance. I got stuff marked up because this is the actual charts I used to trade, and that I trade with my own charts, and it's just so much technical, not so much technical analysis, but technical analysis that I have to keep in mind. Or supply and demand zones I have to keep in mind. So basically, remember overall weekly uptrend, daily uptrend, 4 hour uptrend. What that is telling me buys. So what I was looking for was for high, low, high, low, rejection of this level of resistance, of support, high, low, right here. Price came right here, made a new high, made a higher low, then did all this, made the high. This was all this. I saw all this before London decision. High, then a higher low right here. Kind of the same move price did when it was right here. But just doing it on a higher level, making a higher low on the trend. And trading is 80% psychology. Let me just put that out there. Price action, technical analysis might be perfect, but if you don't have the psychology, you're not gonna catch the right trades. I'll be able to maintain holding a trade, because before I actually lost my trade, I was up in profit like paying 50%. But I'd rather lose the trade than take out early, take out too late. Pro trading. So this was during London session. Price came right here. Let me actually do the bar replay so you can perfectly see what I saw during the session. Let me undo that. Let me see what that was. Okay. That's the weekly trend. And this stuff, let me put that to the side. But during the London session, you can see price did highs, low. You can tell just by not even drawing that path, just by marking up high, low, high, low, high, low. It's trending up. And so what I saw during London session, the time I'm supposed to trade, price came right here, it tested up this high low, did this rejection right here, then made an entry signal after this rejection. And the reason I lost the trade was because I got in on this entry signal. I got in a little bit too early because price was at my entry zone, but I got in too early. Still, that doesn't matter. And normally I wait for my entry, then entry signal, then I would take my trade, something like that. And I scale down to this 15-minute time frame. You see this supply and demand zone. I'm ready for price to break above that level to then go along, because it was gonna go and most likely knock out this level, at least for as my TP1, then keep going. I wouldn't take out at this level. I would be looking for price to go up some more. But yeah, so price came right here, gave me an entry signal. Then I was looking for a price to actually make a higher low, kind of look for a highs right here, scale down to 5 minute, a higher low, to then go along from this position. But since I got into early, I was in the trade by 2:15. I actually got it on the 2:15 candle. That's crazy. And I got it on the 2:15 candle, and the trade kind of started going in my position. But then I didn't wait for the setup. As you can see, I didn't wait for that higher low. And I'm going to show you why the higher low is important, because example, this was it right here, the higher low. But it happened around 7:30. That's why price didn't keep going on. After tapping here, it didn't keep going on. Not on the session today, Friday, the market's about to close in 4 hours or less. And yeah, that was pretty much what happened for my trade. So far today, why I lost that trade, it was whatever. I'm posting this video on YouTube, but yeah, trade off support and resistance, supply and demand zones. Look for a reaction and entry signal to then go along. And so far this week, it was crazy. I only took 3 trades this week, and won 2 trades out of the 3 trades I took. This was one of the trades. This was the only trade I lost. What did they call it? The other two trades I took was pretty crazy trades on crazy days. That's why I didn't really receive profits. Like, for instance, the first trade I took this week was back on Monday during London session, which only gave me a 1-to-1 before Price Perfectly started rejecting off of. And I don't know, rejected off and went bearish or something like that. I really don't remember. But then I took another trade during this week around 8 o'clock, which gave me another the trade went in my profit, but it gave me a good, nice profit. Then they actually reversed it back. And I wasn't trading during London session this week because I was sleeping, and it was whatever. But I'm gonna ace the markets next week and do some post-market analysis on Sunday and drop that also. So I'm gonna see you guys then.